I'm very excited to welcome back Lobo Tiggre to the show, who has predicted this uranium run up. He's been conservative. Also, you got to be disciplined in terms of how we approach this market. And I'm very happy to have Lobo Tiggre here to offer some guidance. Welcome, Lobo.
Well, thank you for having me back. I got to jump in on the predicted thing. I didn't. I saw a trend in motion. I said, I just identified, look, here's a trend in motion. If I want to pat myself on the back at all, I would say I deserve credit for reminding people again and again that this is a 2 steps forward, 1 step back kind of thing. And you want to buy on the 1 step back, not chasing it when everybody's saying, oh, it's going to the moon, it's going to the moon. You call that discipline. Some people call me a stick in the mud, rain on the parade. One YouTube comment was, Lobo always sees the glass half empty. And I get it. I get it. I understand why people say that. I'm never the rah, 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 it's going to $150 tomorrow guy.
Yep.
But my purpose isn't to be a cheerleader. I'm not supposed to be rah, rah, rah. I'm an analyst. I'm supposed to give you the best of my thoughts to the best of my ability, call it like I see it. And hopefully, the goal is not to be hooray for our side. The goal is to make money. Mm-hmm. So sorry, a bit of a rant there, but if you've got uranium bugs on there, they're not going to like everything I have to say because I'm not a cheerleader. I'm hopefully trying to bring useful, true, to the degree that I can, information to the table.
What I do recall from a lot of our conversations is you saying, guys, be careful. Like, people are really chasing this stuff. So like you said, wait for that step back. We do now have a step back in the uranium market. And, a lot of it's just purely just interest rates rising, the all risk assets crashing. You have done some analysis on your Twitter, put out some great content. So kind of where are you seeing the uranium market now? Are we stuck with the rest of the market, with the verge? What are your kind of thoughts on the space?
Sure. Well, actually, let's take that last piece first, because it is disheartening. And here, maybe I can do a little bit of cheering up. And because it's disheartening for the wrong reasons. And that is, on the short-term basis, it is very common. We've seen this for many years, how uranium stocks, they're also seen as energy sector, right? So if you have the market selling off, then uranium stocks can go down on days where the uranium price itself is going up. Like, people pull their hair out, like, how can this be? Uranium is more expensive and my stocks are, what's wrong with this picture? Well, there's still stocks. And, the mainstream investor who has a little bit of exposure here, or the institutional investor that has a little bit of exposure to the energy sector, including some uranium stocks, they're going to follow the formulas. They're going to follow the talking heads on financial media. And so if, the economy looks scary, the energy sector looks bad, or stocks are selling off, these are reasons why you'll often see on a short-term basis that uranium stocks can go down on days where uranium goes up. And the opposite is true too. You'll see uranium stocks go up on days that uranium itself goes down because of these sort of external factors. And that's something to keep in mind. But that doesn't mean people, they get frustrated. Oh, why doesn't uranium drive uranium? Well, it does. If you pull back and you look at it on a month-to-month basis or a yearly basis, it's very obvious. Higher uranium prices recently, higher uranium stock prices across the board. Lower uranium prices this last week, as you and I speak, very sharp retreat this last week. Uranium stocks just cratering across the board. So don't lose sight of the forest for the trees, right? Pick your cliche. Don't get too bent out of shape about the daily fluctuations. Use them, actually. If you're looking to buy, use one of these contrary sell-off days as a buying opportunity. And if you're looking to take profits, use one of these crazy surges way beyond all reason as an opportunity to take profits. Oh, sorry. That was the last piece first. You asked about the context. I don't know if you want to chip in there before we get into the context, but I do have thoughts on the current context besides don't get upset about the daily fluctuations.
Okay, great. Yeah, no, but it's a great point what you just said, because over the last year, uranium stocks are outperforming tech and other assets. So you're saying long-term trend, focus on that, take advantage of the dips instead of chasing the pumps, right?
Yes. Okay. So where are we now? This is where I may get some love and hate from our uranium bug friends here. I am very bullish. Make no mistake. I am absolutely bullish. I do think uranium prices go higher. I do not think that it has to be 2007 all over again. It is not a certainty that uranium has to go to triple digits. It might. If there's one of these manias, you know, the market gets the bit in their teeth, everybody's piling into uranium because it's the flavor that they absolutely could. But it doesn't have to. The fundamental fact here that uranium bulls should not lose sight of is that the market is still in a situation where there's voluntary supply constraint. And yes, Kazatomprom is guided that it's going to maintain that constraint for a while. But you know what? Cameco has already ramped up and is ramping up McArthur River. These are major variables here in what is really still a rather small market. So it may seem like, well, okay, one company says they're going to increase production. Well, one company has one mine that supplies like 12% of the world's uranium. So it's not like, you know, one of a gazillion shoe manufacturers or something like that, or even one of many EV makers. That the actual producers that can deliver uranium to market are not that many. And they're dominated by a couple of big players. So a change of plans here has a material impact on the market. And it's not like Cigar Lake flooding in 2007. That's an involuntary situation where you can't just, you know, ramp back up again. This is a situation where the producers have recognized low prices, have caused low prices to be the cure for low prices, and cut back on production. That is easily reversible. Now, I'm not saying instantly, care and maintenance, I get it. But it is reversible. And I think uranium bulls should remember this. We are in a voluntary, it's like OPEC, right? It's a voluntary supply constraint that is reversible. So unless there's some kind of event like Kazakhstan getting sanctioned and uranium going through the roof, I'm not predicting that. It is a possibility. It's a card in the deck on the table in front of us. Clearly, I'm digressing, but this is important. You know, the Kazakhstan government, Kazatomprom itself, you know, they don't want to be sanctioned. They don't want to be behind the wrong side of the Iron Curtain, if you want to look at it that way. You know, they want to continue participating on the world stage. They want to sell as much uranium as they can and other products, but they may not have a choice. If the Russians, you know, they're very closely tied to the Russians. If the Russians really put the squeeze on them, they may be forced to take sides more materially. They could end up sanctioned. And that would, I think, blow the lid off the uranium market. I think it's a mistake to assume this will happen. I certainly wouldn't, you know, bet the farm because this might happen. As our friend Rick Rule likes to say, I want to bet on when, not if questions. And Kazatomprom supply being taken off the market in the West is absolutely an if, not a when question. I don't think anybody could predict that. And I wouldn't believe anybody who said they could. Okay. So that kind of digression aside, remember, voluntary supply constraint. And yes, it is different this time. And it's good and bad. You've got SPUT. You've got, you know, all these different non-end users taking uranium off the market. And that's clearly cleaned up all the cheap uranium pounds out there. We have much better price discovery now because these entities have hoovered up, you know, all this cheap secondary supply. So that's all good. And I think is very bullish for the sector. But with the possible exception of SPUT, the Sprott Physical Uranium Trust, I think our audience knows that, but I should spell it out. A lot of these entities, these speculators, oh, those evil speculators. Wait, I'm a speculator. You know, all these evil speculators buying up uranium, they're not buying it forever. They're not going to stuff it in the mattress. They're buying it as a speculation, which means buy low, sell high. So there is a very real case to be made in this market for high prices having a more quick way of curing high prices than in previous things. Remember, I said, okay, voluntary supply constraint. It'll take a while to bring these mines back on. I mean, McArthur River, it's taking them a time. You know, if you look at the junior producers that have mothball production, none of them say, oh yeah, tomorrow we'll start producing. They'll sell out of stockpiles. They're saying 6 months, 12 months to get restarted, even for in situ mining, right? So yes, I understand that it takes time for high prices to cure high prices, except that if you're an institution or a fund that bought uranium at 25, 30 bucks, and now you're sitting on a double and you need that money, like one of these miners that bought it specifically to fund their project construction, they're telling you, we will sell, right? I mean, that's not an if. That's a win. And some of these guys are starting to move forward on their projects. So you know they're going to be selling. They may be selling right now as you and I speak. This is different. So I'm not trying to rain on the parade. I'm not bearish on uranium at all. I do think we still have higher to go just to hit a stable incentive price, right? It used to be, 10, 15 years ago, people talked about $40, $50 being an incentive price. Now it's $60, $70, but with inflation and all the things going on in the world, that might actually be an outdated model. We might need 70, 80, but I don't think we need 150. And the higher it goes, the more of this institutionally held uranium that's in the money, that's big unrealized gains for these players, these speculators. I don't blame them at all. They bought low, they deserve to profit from selling high. But just keep this in mind that this takes no startup for a fund to say, I'm going to sell my uranium. They just have to do it. And they make that decision. I don't know how long it takes them to actually sell millions of pounds of uranium, depending on the size of the contract. But I've gone on long enough. This is the context I think people should remember. It's not the same. It's not bearish, but beware of these cheerleaders who say, oh, it's got to go to the moon. It's got to go to the moon. What's the practical takeaway from this? Buy on the dips. I mean, not just dips. Buy on those big steps down, but don't be ashamed to take profits. People are like, oh, you lack conviction. You traitor. You sold before it went to the moon. No, that is a rational thing to do under the current market circumstances. And sorry, one last thing. Fellow uranium bugs hate it when I say this, but it is a fact. It is something that we must all remember, is that this is a market that can literally blow up on us. Right? And we had that scare in Ukraine just a couple of weeks ago when a plant was threatened there. One bad accident makes all of our stocks crater. So in that environment, it makes no sense to hold forever, to never recover, at least your initial investment, never take any risk off the table, to remain fully exposed, full risk on, unrealized big wins, leave them all on the table in a market that can literally crater on you overnight. That is silly. So I'm very bullish, but I'm done raining on the parade. That's my context. This is why I'm seen as the glass half empty guy. It's still a glass full of water, or half full of water. And I just think it's important, if the goal is to make money, to make sure you make money as you go, not for some eventual promised, Valhalla in the future.
No, I really appreciate that realistic approach, because people need to understand this, the real supply demand dynamics behind commodities, cyclical, like it could all change. And that is a very good kind of reminder for people. But then let's get into the long-term story and why you are bullish. You've seen that chart, which shows demand far outstripping projected supply. What is your take on that? Is that why you are primarily bullish?
Yeah, well, not just the chart. I'm a fundamentalist. And if you look at it's not just narrative, okay? It's not just story. China just approved 6 new reactors, and this is part of a longer-term plan. Your longer-term picture here for more than 150. This is a big deal. This is not a marginal change. This is huge, and the BRICS countries writ large, are going down the same path. Even in the West now, there actually was, before Fukushima, there was a nuclear renaissance getting underway. Even one of the founders of Greenpeace, Michael, if I'm remembering his name right, I can't remember his name, but it was one of the founders of Greenpeace, came out as being pro-nuclear. Like, we really need to rethink this. If you're serious about climate change, we need to look at all options, not be myopic. It's going to take 50 years to build enough windmills, and we can't wait that long. So that was starting to get going. And then Fukushima hit, massive overreaction. And that is getting going again. I think it is stronger now than it was then. I think there is, let me rephrase that. I see evidence of real panic amongst the climate change extremists. And I'm not even dismissing climate change or global warming, or I'm not taking sides on that. I have to say I'm not worried about the world, everybody dying in 9 years or whatever it is we supposedly have left. But the same facts pertain whether you're a believer in climate change or human caused climate change or not. The same facts pertain that if you wanted to do something about this, you need non-emitting energy, and you need it now. And if ever there was any doubt about that before, before the war, like the COVID shutdowns showed that, there really is no choice here. In 2021, we saw a massive increase of burning coal of all things. That's the dirtiest possible choice if, from the climate change perspective. And the fact that for all the fear, for all the UN, fear mongering, sorry, but, all of the hype on this subject, the fact that basically when push came to shove, the winter was cold, there wasn't enough of anything else. The world went back to coal, and not just China, by the way. Germany went back to burning more coal. In Europe, right? Even the most woke countries, if it comes down to people freezing in the winter, there's no choice for the politicians. They will get the energy from wherever they have to. So I think in this context, extremely bullish for nuclear energy going forward. Maybe by 2050, it's phased out in favor of windmills. But for the investable future, for the next 10 years or so, I think that's as close to baked in the cake as you get in the investment world. So and the fact that even Germany is considering stopping their shutdowns, you've got Elon Musk out there telling Germany it is insane, pounding the table. Like in that interview, he repeated like 3 or 4 times that it is crazy for Germany to shut down its remaining nuclear power plants. And I know there are technical people who say, oh, well, they've done this and they can't stop that. But where there's a will, there's a way. So I guess I don't need to beat that to death. Your audience probably knows what I'm talking about. But if there's a takeaway here, it's that this is a really big deal. It is a major shift. It's in the West as well as in the BRICS countries, though the West is dragging its feet. Ultimately, reality matters. And now on top of this, you have a world war almost. Well, you have a world economic war for certain, and the new Iron Curtain. And, the voluntary supply constraints could be a massive structural supply deficit in short order if things go the wrong way. So, yeah, I'm very bullish.
Okay, so the thinking is, there's this big demand growth worldwide. Supply is going to be constrained long term. And so the spot price will need to rise in order to incentivize the production needed to meet that future demand. Right.
Well, actually, let's jump in real quick. The spot price will do all kinds of crazy things. It can be pushed around. If there's a recession and there's fear in the energy sector, spot could actually be pushed down. Some of these institutions that hold pounds and, for investment purposes could dump them because they think, oh, no, we got to get out of energy. So actually, remember about the long-term contracts. If you're a producer, you're not, well, I mean, you might, but your bread and butter is in the long-term contracts, not buying or selling into the spot market. And so those are the prices that we need to pay attention to, and they will smooth things out. I think this is actually a good thing for the investor or speculator looking in the space, is that if you've got a company that has contracts locked in, I mean, look at Chemical. It's kind of turned around to bite them, until uranium went above their hedges. Everybody loved Chemical because they made money. They could even buy on the spot market and sell into their contracts without having to deplete their mines because spot was so cheap. It was cheaper than mining for a while. How great was that? Well, until, the uranium price went above those hedges, then it became a problem. But generally speaking, your long-term price contracts are what provides stability and profitability for those producers. Whatever the spot price does, if you've got a contract, say it's 70, and the spot price goes up to 90 for a week or two, and oh no, that's terrible. But you're mining at 40, right? You're still making money. Whatever the spot price is doing, you're mining at 40, you're selling at 70, you're making money. And if you can do that for years, that is a great thing in the resource sector to have that kind of stability. So don't forget to look at long-term contracts. This isn't, there's no central clearinghouse for this where you can go and see, so you just have to look at company disclosures when they do announce their new sales contracts, look at the prices they're getting. And I think we will see good news because the miners are not going to sign long-term contracts, even at current prices. It's just not enough. So I do see higher prices that then become very sticky because of these contracts.
Excellent. That is really good insights long-term for the uranium spot price and what's moving it. So that's huge. Good to know. One thing you actually shared recently, Germany energy giant Uniper gives in to Russian ruble demand. You're saying Germany's got Putin's message. got uranium stocks. How is that all interrelated? And is this an if event for potentially big moves in uranium?
Well, to be fair, it is Twitter and you only have so many characters. Yes, I'm not above trying to attract a few clicks here and there. I do try to be forthright, though, in what I'm tweeting. But to be fair part is, if this giant gas company in Germany announces today that they are doing this, clearly they were in the motions. They were all, I mean, that can't be arranged in a day. They had to make arrangements. It took a while. They saw the writing on the wall before the latest news. The latest news is that Poland and Bulgaria were cut off from Gazprom supplies because they wouldn't pay in rubles, as Putin has demanded. So it is true, I think, that Putin is sending a very clear message to the West. They didn't start with Germany. They started with Poland and Bulgaria. But it's all of the West saying, no, we want to pay, or the governments are saying, no, we've got contracts, they're in dollars and euros, we're not going to pay in rubles. And now you have a company saying, well, we've set up this thing where we're going to pay this bank in euros or dollars, but it's going to be converted to rubles to pay Russia in rubles. Now, is that skirting the sanctions? I'm not a legal expert, I can't tell you that, but it's not a surprise, it's in there. The important takeaway, though, is that Putin really has stepped up here the bar. I mean, he has thrown down the gauntlet, cutting off. This isn't just, a threat, or we might, or I mean, they've cut off two entire countries from the main energy supply. In Bulgaria's case, almost completely dependent, like no other source, really. I mean, Europe is interconnected, but that's where Bulgaria got its gas. So this is a big deal. And it's for the same reasons that other European countries are saying. Russia is saying, we will cut you off. And this is energy. So the significance, actually, we should probably just stop and talk about your energy in general. People have this knee-jerk reaction of, the market's going down, or the signs of recession. The US GDP went negative in Q1. Sell energy because, a slowing economy, a slowing marketplace means we'll be less energy demand. Well, that's not necessarily true if suddenly there's a major disruption and supply cut off, not drifting down, but just cut off like this at the knees. It is not necessarily so that energy prices will go any lower. In fact, if this cutoff spreads, if Europe really does get cut off, it's a massive shock. It's extremely bullish for US producers. And if you just sold because you think energy is going down because of the low US GDP print, you made a massive mistake. This is not a set of predictions. I'm outlining scenarios and probabilities here. But I got to say, this is not something Putin can walk back from. He has thrown down the gauntlet. He has said, I want to be paid in rubles. He has cut off two entire countries for not paying in rubles. And here you go. Here's a German, energy giant saying, okay, we'll make a way to kind of abide by the sanctions, but kind of pay in rubles. To be continued. Who knows how this will turn out? But don't underestimate how big a deal this is. So I think this is just one example of this entire context, which, by the way, started with the COVID lockdowns, and now you have the war on top. So this is very bullish for energy in general. It's bullish for commodities in general, but also the energy part makes everything else cost more. It's the key input in everything. So it's very inflationary, even in a weakening economy. It's basically stagflationary. If Putin cuts Europe off, the economic hit will be massive, but it won't necessarily make inflation come down. We could be looking at a stagflation on a level that really makes the 70s look like a warm-up or a practice piece, something. These are, I don't want to sound like the sky is falling. I'm saying that investors in the space need to be aware of these possibilities. These are big deals that are going down now. The whole global landscape of commodities, energy, uranium, all minerals and mining, it is changing. The new Iron Curtain going up reaches the sky and is literally reaching space, with the Russians pulling out of the space station. And it is getting thicker by the day. This isn't something that goes away with an apology tomorrow or something here. This is a global economy game changer in the true sense of the word.
Exactly. And related to that is there's this article saying stock route is Fed's best case scenario as Powell put era ends. And you said, yeah, it's tighter, but you're not seeing an impact on inflation, which is kind of disastrous. And is the reason why that might not affect inflation also due to kind of China shutting down its ports because of a COVID scare that's happening, the polarization, like, and is this here to stay for the foreseeable future?
Yes. Short answer, yes. It all fits together, and it fits in with the war, the sanctions. I mean, look at the food cost forecasts. I mean, that's scary enough. It's inflation is bad. Inflation gets people out on the streets. In fact, inflation is what got people out in the streets in Kazakhstan. It does it all the time in Latin America. Hunger is hunger, and it's arrogant to think that it can never come to first world countries. This is the stuff ultimately that revolutions can be made of. I'm not preaching brimfire and revolution. I'm saying this is a big deal, and it's an election year in the United States. So the presumption, the model that mainstream economists, including the ECB and the Fed's people, work on is that inflation is the result of an overheated economy. Too much economic growth creates inflation. Therefore, slowing economic growth reduces inflation. So a lot of people who, they make fun of the ECB or Powell for saying, oh, we want more inflation. Like, how can you want something that deteriorates the value of your money? Well, it sounds silly, but what they're saying is, when inflation was low, what they were saying is we want more economic growth, which we measure by inflation. Wrong measure. It is stupid, but that's what they were saying. And so now they're saying we want a slow growth to control inflation. But what if that doesn't work? What if the model is wrong? What if the Fed does slam on the brakes, does put the economy in a serious recession, if not worse, and inflation doesn't come down, right? What if it's not caused by an overheating economy, but it's caused by all the money printing, which is not done yet, by the loose monetary policy, which is still loose? When you have 8.5% inflation and you've raised your interest rates, by 25 basis points, or a shock and awe, 50 basis points, that's still loose policy. That is still massively stimulatory. So, even from a monetary perspective, it's not tight yet. There's no reason to expect basically anything the Fed does next week to have any impact on inflation now. But it can crash the market. A shock and awe rate hike, say they go to 75 basis points, they panic. That could really crater Wall Street, and it could cause lots of economic harm. At the same time, the supply chain disruptions, like a third of the ships that are stuck around China now. And this energy shock, suppose Putin does cut off Europe, energy prices soar, that impacts everything else. So we could see high inflation, not to say runaway inflation, at a time of great economic weakness, not to say depression. All of these possibilities are there. The ranges are there, but they look like stagflation to me. And even mainstream banks are now starting to call for this. And that's really striking. It's not just me, the lone wolf out there, my gold bug tinfoil hat on, right? It's mainstream banks in the US and Europe starting to use that S word, stagflation. So something wicked this way comes. The presumption that that harming the economy will control inflation is about to be put to the test. And I know we're talking about uranium, and I do think all of this is very bullish for uranium. I guess I'm going somewhere else with this, but real quick on the uranium side, there is and will be a knee-jerk reaction that any economic weakness is bad for the energy sector, it's bad for uranium. We are likely to see, especially if there's a stock market crash, uranium stocks crater. And spot uranium, by the way, will fall too, despite what the long-term contracts do. I do see that as a buying opportunity. None of this changes China's plans to build more nuclear reactors. I think the only thing that can really derail the uranium and nuclear renaissance would be a major nuclear accident. Something worse than Fukushima could change the course here. But absent that, I think, economic scares, war scares, sanction scares, to the degree these create, downdrafts, I do see those as that, 2 steps forward, 1 step back, buy the 1 steps back, especially if you're new to the sector. If you thought you missed uranium, it's gone up to $60 a pound. and I've missed it. Well, now in this correction, this type of one step back is the time to buy. Okay. So that said, I do think it's worth saying to your audience and really anybody who will listen in this type of world. I mean, think about it. It used to be a tinfoil hat thing to even talk about the possibility of World War III. Now that's in mainstream media headlines on a daily basis. And, and to be fair, Putin said years ago that NATO was pushing the world towards World War III. Now, of course, you can say, well, he's pushing, and I'm not taking sides on that. I'm just saying that he communicated on this years ago. And now, and you were dismissed if you even took that seriously or commented on it. Now, this is in the daily news. A world in which all these things you and I have been discussing, in a world in which political lines are being redrawn, the new Iron Curtain is changing supply chains, which were already broken from COVID. This is not a world in which everything is fine, everything is going to be kiss the boo boo, and it'll be better tomorrow. This is a world that sustains safe haven demand for things like gold and silver. So I'm branching off, I'm wearing my gold bug hat here, but I just don't see everybody waking up tomorrow and saying, yeah, I don't need no gold no more. The world's fine. I think the downside is limited in monetary metals. And I think the upside is quite significant if inflation expectations get out of control. If the Fed loses control, I think we could see a 1970s, late 70s style surge in gold and silver prices. So, it's not just uranium that can go to the moon. There's other things out there, invest accordingly.
Yeah,
sorry, I can speculate accordingly.
Right.
No, again, hold gold and silver bullion, physical, in your direct possession as savings, as safety. That's the safe haven aspect. I'm not calling gold and silver themselves speculation. I own the coins, right, for a very practical, pragmatic reason. But the stocks, speculate on those because those could be, life-changing.
Absolutely. And you're right. It seems like the market is still following the old model. When the Fed raises rates, it wants to crash, the whole broad market, even gold stocks. But that model very well may break, especially because I think CEOs are coming out saying that the supply shortages are going to be around for another year. Well, so what are we going to do in that year? Like inflation is going to be sticky. And so in that environment, the model breaks is kind of what you're saying based on. Yeah. And that would be a surprise and an upside surprise for gold and silver, I guess, is the thinking, right? In environments like this.
I think so. I'm not the only one, but yes, that's right.
Absolutely. Wow. I think you painted a pretty clear picture of kind of the setup, what we have to look forward to. Is there anything else you wanted to share before we close out?
Yes, there's one other thing that I've been writing about that I think is really important for everybody in the resource, but this is not broader investment or global economy, but very specific to the resource sector. And that is that for years, we've had this problem with this not in my backyard thinking, right? NIMBY thinking, pushing mining and extractive industries out to those other faraway places with people with darker skin, but who cares about their land getting polluted? It's kind of, if you think about it, NIMBY thinking is kind of racist, but let's not go there. The fact is, it's been harder and harder to permit mining projects or any extractive industries in the so-called first world, developed world. But at the same time now, you have these changes, these like really tectonic shifts that we've been talking about in the world of resources. And the new Iron Curtain is only part of that. The need for energy independence, it's also critical minerals independence. It's really becoming any raw materials security and independence. And there's the specific push here of the climate change panic, really digging in now. And I think the key point here is I think that the powers that be, whether we agree with it or not, the powers that be are more wedded to the climate change narrative than to not in my backyard thinking. I think that NIMBY thinking will give way. We've seen signs of it starting to give way already, even in first world countries or so-called developed countries. So I think projects that weren't permittable before might be permittable in the future. I'm not saying to go out and buy everything that's been shot down. I'm saying this is one other change, very specific to the resource sector, where many of us have have gone to jurisdictions that are riskier in other ways, like physical safety and other problems, because you can get permitted more easily there. And that, I think, is changing. And if you can get more easy permitting in countries that have better rule of law and better physical safety and now are more permittable, that's actually something I think resource investors have to keep in mind. Now, the details are, of course, myriad. One size doesn't fit all. Due diligence matters here. This is not a blanket admonition here, but it is something I think that will bring opportunity for people who are willing to do the homework and look into the right opportunities in the right jurisdictions.
Where can people go to stay on top of your updates and insights?
Well, thank you for asking. For the 3 people left after the end of interview question, I'll say I'll encourage people to sign up for my free weekly digest. It's an email product. It's not available on the web. It goes out once per week via email. And you may like it, you may not. But one thing I can tell you for sure is you will not get a flood of daily advertisements. I don't spam my readers. I hope the free letter provides value, convinces you to do business with me. But if not, it still helps me to increase my circulation on the free letter. So it's a win-win. Please do sign up. I hope you won't regret it.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky and you can lose lots of money in them.